Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. After the drop that we have seen last week, you can see action is not really very strong because market just stands inside of the strong support area. So this is really important level, since this is confidence support in the daily chart, daily and weekly oversold. In 1250 area is also the major 3.8 pips support. That is based on the rally, the starting point of the rally that takes place in 2015, when this upward action initially has started, right from the lows around 1000 even area. So after initial drop, as you can see, reaction on the relatively worse than expected non-farm payrolls numbers was poor. So you can see this was just minor bounce here. And right now we should watch for price behavior in this level by many reasons. First of all, take a look that Friday action has taken the shape. I will erase them oversold at level to show you. It looks just clearer. So as you can see, market has formed this high wave pattern. This is very important pattern because most traders underestimate its importance. Because they think that it's not directional, that's why it's not really important. But in fact, when the market forms the high wave, it's a very good indicator of the further direction. Because usually when the market takes the extreme point of the high wave patterns, either to the upside or to the downside, in most cases it follows in the same direction. Right now, market on the Monday session and today's session, it stands inside the range of this high wave that has been formed on Friday. It means that market right now is still indecision. It's either indecision or it just has no power yet to continue move down, because market is oversold. And according to our weekly research, we mostly have spoken on the possible upward retracement, because this upward retracement is very attractive to us. Because we expect further drop on the gold market, and this retracement could give us very good advantage. Why? Because take a look, this thrust down is suitable for the Jordan application. So we have the 8 bars to the downside. It's very good thrust down. If market will reach 1280 area, we will get the bread and butter sell. And bread and butter tells that with a very high chances, very high probability, market will show the backward action to the 618 support of this possible whole upward action. This in turn will let us to move our stop to the break even and will lock the trade in the loseless area. That's why we will get very good advantage, because if market will already drop further, we will get excellent position. If market will by some reason will turn up and will continue move higher, well, we will lose nothing. That's our major idea. That's our trading plan, what we would like to get. Because overall technical picture suggests some upward retracement, at least minor retracement. Chances on the upward bounce very significant. That's the first idea, the first trading plan that we have on the daily chart. Another interesting moment here is the bottom of the Brexit candle. So this action is the Brexit voting. As you can see, market wasn't able, initially it has taken out of this top, but has no power to continue move higher, then turned to some flag consolidation, and right now it dropped further to the downside, return right back down to the bottom of the Brexit candle, and even shown this spike down and create the new lows compared to that one, but it's not the breakout yet. So if real breakout will happen, this will significantly increase the chances on the further drop, because when the market abandons the wide range. As you can see, it stands in the range since June. Right now is October. It's more than the 4 months. Market stands inside the range of this candle. This is very typical action. When the market forms wide range candle, it usually stands inside of it for some time. But when it abandons the range of this candle, it usually follows in the direction of the breakout. And very often, this usually applies to these breakouts, it should pass down the same distance as the length of this candle. So you could understand what does it mean. It's approximately $100 per contract, right? If you will count it down, you will lead to the 11 and 50 area. That's approximately the level that we expect to get on our monthly analysis. So that's why it's low. This low is very important. We think that market has stopped here not just because it's some kind of this wash and rinse of these lows or stop grabbing or something of that sort. No, just because market is oversold. We're sold at the strong support. In fact, here, guys, we have the stretch pattern, Judd Napoli bullish stretch. That also increased the chance of the upward action. But as we said in our weekly research, we have no intention to trade gold market on the long side. We just try to use this upward bounce for the short entry. We would like to sell the rally, but not to trade the rally itself. That's why here we mostly will be watching for upward action, and when the market will leave the range of this high wave pattern. We hope that this will happen to the upside and market will finally reach this area. So if you'll take a look at the forward time frame chart, this also will be the confidence resistance. So 1280, 1284 is confidence resistance. That's why it looks really interesting. On the hourly chart, guys, here we do not have any patterns, any reversal patterns yet. All that we have is some kind of the widening triangle that we have discussed. But take a look, market hasn't taken out its top yet. So yes, it stands inside the width of this triangle, but it hasn't abandoned yet the range. So that's precisely the action on non-farm payrolls on Friday. So that's why here we don't have any clear bullish patterns that could trigger upward reversal and that could bring market to the 1284 area and trigger the brand body sell. That's why, as we have no patterns, market stands at the oversold and the confidence supports. No time to go short yet. To go long is also no reasons because you do not have any patterns. That could let you to take the long position. Maybe only the stretch pattern, but if you will take position right now, you will have to place stop below these lows. It's rather significant distance. That's why it's better to wait for some minor patterns, smaller patterns that could give you a chance to take the tighter stop. If you, of course, would like to trade gold market on the long side at all. As I said, we do not have such intentions here. So that's been said, on the gold market probably need to wait a bit more to see how the upward retracement will take place, whether it will happen at all or market will drop like a stone below 1250. It's also possible. But let's hope that we will get our rally, short-term rally here to the 1285 area, and maybe we'll get a nice chance for taking the short position.